Big week. Let's just sort of lay the groundwork for it briefly. Julia, immediately, of immediate concern, what's on your radar?
One of the funny things about last week was the Australian market really underperformed, especially on Friday, where we saw the Shanghai Composite up by 3.7%, and yet we saw our market only up by 0.3%. And in fact, our benchmark index really telling little about what's happening in terms of the market at the moment. In fact, if we have a look at Friday's performance, it's a good point, case in point, in that we saw the ASX 20, or the top 20 blue chips, on the Australian market quite flat. The overall index was up by 0.3%, and yet the small caps managed a rally of 1.3%, and we saw that trend all throughout the week last week, where the market was up by 0.2%, yet the small caps managed to rally 1.7%. It's all about stimulus at the moment, and we haven't seen much of a flow through coming through to our big blue chip companies, but hopefully we will see a very good performance by BHP and Rio Tinto, and that will help our index higher today. We just saw the European Central Bank last week with the OMT, or the unlimited sterilised bond purchases. We've seen China stimulus come through, and a weak non-farm payroll numbers, so expectations of quantitative easing coming from the US this week. So this week is going to be a monster week. There's really two key things that we're watching. One is the German constitutional vote on the European Stability Mechanism, and that's on Wednesday, and the FOMC meeting in the US on Wednesday and Thursday, where there's around about a 50% chance that we'll hear of more quantitative easing to be announced. Here domestically, it's going to be quite interesting as well. We'll get the home loan numbers out for July, and we know that a lot of international players are watching the home loan data in Australia quite closely to see whether we are going to see more downside in terms of the construction market. And of course, those China numbers, they're going to be watched very closely today. The export numbers, the last set of numbers that we got, was a rise of 1%. Expectations are that we will see growth of 3%. But of course, if we do see a weaker number, that's really going to feed into expectations in terms of the Australian share market. Just very quickly having a look at the market map for today, and there's one thing that really stands out on this market map, and that's this bright green area here. That's the materials space, expecting to see a stellar performance on the back of higher commodity prices and that China stimulus package which was announced last week.
Are you watching my numbers today, or any other company news specifically that you want to get across?
Watching Boral, it's a company that's now looking to have 3 CEOs in the space of less than 1 year. And this, of course, was the result of former CEO Mark Selway losing the support of the board back in May. So we did see Ross being the acting CEO. Now we've heard of a new CEO, which will start on the 1st of October, and that's the US business head, Mike Kane. So altogether, it's been a pretty difficult time for stocks like Myers, but also stocks like Boral as well, where we have seen quite a lot of cyclical weakness, especially in the Australian housing market. And if we have a look at their business, it is the Australian business which is of concern, and that's because we've really seen Boral underperforming some of its peers. And in fact, if we have a look at across the building material space, Boral hasn't done too badly, with a loss of about 7% over the past year. That's compared to CSR, which has lost about 42% over the past year. But then on the other hand, we've seen stocks like James Hardie doing well, up by about 50%, and also Adelaide Brighton, which is up by around about 10%. So altogether, pretty mixed performance coming from those building product companies, but a lot of it has to do with the cyclical weakness that we're seeing. A new head at Boral, the market's going to be watching to see whether there will be any changes, especially in terms of cash generation, cost cutting, and I guess just waiting for that cycle to turn.